Hey, good morning, everybody. It's Hammer. Today is, hold on, I got to get it. It's Wednesday, January 21st, 2026. I hope you are having a great day today. Remember, any day you wake up and see the ceiling has the potential to be a good day. So make the most of it. So, anyway, my name is Hammer. I am the founder of Originator Success, Grab and Go Social, and Rate Sensei. Be sure to go check those products out at their websites, find out more about them. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. If you like the show live, make sure you sign up to get a text reminder so that you don't miss a damn thing. Check us out. You can sign up at hmmr.io/reminder. That's the Hammer Solutions short code. Hammer Solutions, by the way, the actual name of my legal entity company. But hmmr.io/reminder, or use this cool QR code over here. Remember also, you can sign up for our free daily email lock advice to your inbox each and every weekday morning, www.ratelockadvice.com. And you can sign up for our text alerts, www.ratetextalerts.com. $7 a month. You can't beat them. You should join them. The other services have gotten very expensive over the years. So not that they don't have a lot of bells and whistles and features and marketing and this and that and the other thing. But if you just want something to protect your pipeline and you're not using all that other stuff, can't beat $7. So anyway, let's go ahead and keep on going this morning. Hope you all are having a fantastic day. If you're here this morning, say good morning. Don't forget to smash the like button, tag an hello friend, share the post in a group. Make sure you comment, because comments are engagement. Engagement is why people see this, and I always appreciate you doing it. So let's say hi to the live folks, and then we'll go ahead and jump in and get started this morning. We've got Holly Johnson. First one to say hello this morning. Good morning, Ms. Holly Johnson over there on the YouTubes. Great to have you here, and happy hump day to you as well. Michael Scott Love, Dev Dickinson, Yasmin Martin. Good morning, Megan Bissell. Megan, that new, that looks like a new, is that a new picture? Maybe it's not. I thought it is. It looks like a new picture. Nicole Samarad, Ellison Foy. Good morning. Amber Moser. Amber, were you the one looking to find out what you should do when you turn 40? You little youngin'. I think that was you. Good morning, Brandy Brickler, Carmen Amoendo, Amy Blauser, and Zane. Zane, what's going on, my man? 6'7". Is this still a thing? It'll be like, I don't get it, dude. You'll have to explain it to me one day. Jessica Wells, good morning. Eric McDonald, Rob Stewart, Mike Tebow, Jared Vincent, Ron Siegel. Ron Siegel says today, National Granola Bar Day. So let's go ahead and before we get to the real stuff, let's go ahead and ask, what is your favorite granola bar? Mine is the Nature Valley peanut butter. Nature Valley peanut butter ones. Those are my favorites. In fact, I might even have one over here. Hold on a minute. Let me see. Let me look in the snack cabinet. I've got the Nature Valley sweet and salty peanut butter one right here. Definitely one of the yummy ones. And yeah, it's just the sweet and salties. I like the other one too, the regular granola bar, though. These are the ones that have everything mixed in. These are amongst my favorites. What's your favorite granola bar? Let us know in the comments. We're going to go ahead. Randy said, bracing for the storm. Is that supposed to hit Texas too? I've seen calls anywhere from 3 inches to 27 inches of snow in my area. It's kind of crazy. We'll see what we really get. It makes me laugh. And Peter Riley, you're 40 next month. Men hitting 40 is nothing. Y'all are babbies. Y'all are babies. Good morning, Mr. Max Franks. Glad to have you here, my friend. So, all right, let's get into the good stuff. You guys ready to get started? Give me a thumbs up. Let me know if you guys are ready to jump in. I'll share the screen. We'll get into it. So, taking a look here, we're going to pull up mortgage-backed securities. I did not pull up Presentify yet, so let me pull up Presentify. Here we go. Okay. I got to close this. All right. Let's zoom in on this. It'll take a second, but there we go. All right. So if we take a look, you don't get that full picture from the 5-day. You really have to see this big dip that we had starting on Tuesday. So remember, we ended the day. This is Friday right here. And this is Tuesday. And of course, Monday was closed in observance of Martin Luther King Jr. Day. So we woke up Tuesday morning to the big drop in rates here. Oh, I'm sorry, big drop in mortgage bonds, big jump in rates. Rates basically, I mean, they jumped about 1/8 to 1/4 point. What do you guys see on your rate sheets? Would you call it 1/8 or 1/4 point higher? Let me know in the comments, please. Would you say that things went up 1/8 or 1/4 point? According to Mortgage News Daily here, if I pull this over, and let me just make this window a little smaller and we'll look at it together. If we pull this over here, this is closer to 1/8 than the full quarter, but I would say that rates probably jumped 1/4 point, 1/8 to 1/4. Lenders were trying to be aggressive, and then lenders were being conservative when yesterday's move. And that was actually became a little more, we'll move this to the 2-day. That became a little more of a move. A little more apparent when we saw this. So we saw early volatility. Remember, there's a big drop. We're actually dropping from like up here. So we're dropped again, a lot of volatility. Lenders were generally setting pricing right around here. It was the high point of the day. I mean, you could argue 10:30. You're generally looking at this. You're right at these higher points of the day. But I don't think lenders were pricing at this level. They were pricing below that. And what do I mean by that is the rate sheets were more conservative. Will said he saw 1/8. Vicky's watching the Davos speech. So, yeah, Trump said he wasn't going to take Greenland by force for what, I didn't think that was ever on the table anyway. I don't think we'd actually have to. I don't think anybody wants World War III. So the thing that's going on here, we saw bonds lose ground through the day yesterday, but there were not a lot of reprices worse. In fact, here, I'll use Mortgage News Daily. They've got a cool little thing that they track it with users. And here, but just like here, you could see there were a handful. I mean, just a couple of reprices worse through the day. Most of them coming in at the end of the day when, basically when things were wrapping up. And there really weren't many. Now this morning, we're right about here. Let me get my head out of the way. We'll make this full screen for a minute. We'll go over this. So taking a look this morning, mortgage-backed securities right about here, similar to where we were yesterday when pricing came out, not too far off from that. It helps to, today's gains were up 8 basis points. Before we were up about 11. It helps to wash out these losses here, but really we're kind of flat, and flat is probably the closest thing we can come to a win right now. So, Ron, it's droning. I can't listen to Trump speeches because he does just anyway. Looking at the 10-year Treasury, it's important to note we're still below 4.30. We ended at 4.30 yesterday, 4.295. So that's 4.30, and we've fallen below 4.30 to start the day. Reprice risk today, though, is definitely moderate. Things have slowed down a little bit. Hold on, I got to fix that. It says low. Moderate. There we go. All right. So, basically reprice risk on the day is moderate. It really depends on if any news comes out of Davos there and what kind of gets said from that situation. If it leads into a bit of a big deal. Also, yesterday, one of the things that we want to make sure we realize is that although Greenland definitely was getting the most attention on social media and it was getting all of the headlines, what was happening in Japan also had a lot to do with what happened here in the United States and our bonds. So if bond market backlash triggers reality check for Japan leader ahead of election. So this is, forgive me, I don't necessarily know if I'm pronouncing this correctly, but the Japanese Prime Minister Sanae Takachi pledged to waive a sales tax on groceries for 2 years. Buying votes is not just an American thing. They have an election that's coming up, a snap election, and so she was giving away a big consumption tax giveaway to win over voters. And that is something that shook markets, and markets didn't react well to it. Japanese bonds sold off big time. Their 40-year bond shot to its highest level ever. I know it says it somewhere in here. I've read it a bunch of places. The yield on Japan's 40-year bond at one point hit 4.2, its highest level since it was first issued in 2007. So this did have an effect yesterday on our bonds and kind of what was going on with it and everything there. So this morning, a lot less drama. Markets have kind of reacted to that news. There's not enough gains that we're going to get excited. Basically though, this puts us, 6.21 using Mortgage News Daily, that puts us right back where we were at the beginning of January. Basically this whole time. So everything that we picked up, if you remember, when it says 606 here and then 601, this was after the GSE tweet where Trump said we're going to buy mortgage-backed securities, and he improved affordability for less than a week. You can't manipulate this stuff down, not unless you're doing it consistently. We said it was no quantitative easing. I also said lock it while it was there. I did not see the Greenland stuff coming and rates jumping, but that's why, we knew it was going to be something. It just was not a big enough deal to see everything stay significantly lower. But the good news, there's a bit of a cap. So as far as locking, yesterday when we sent out the late day text alert, I said be careful about chasing rates. Today puts us similar to yesterday. We lost ground yesterday, and it did put me in a position to say to consider locking some loans. And I said it was a tough decision ahead. Let me move this over so you guys can see it better. Here you go. A tough decision ahead as some lenders may reprice worse late, and we could see more selling. By the way, I know you all want to sign up for these wonderful text alerts, so let me throw that back on the screen for you. Here you go. All right. And now I have to push this higher up on the screen so you guys can see what I see. There you go. Okay. A tough decision as some lenders may reprice worse late. We could see more selling in the coming days, pushing rates higher. There is a ceiling, but we'll only know it once we hit it and can start looking back. I don't think we're there today. I think there's still room for things to get worse, so we want to be careful. Expect this volatility to continue through the next few days. Be careful chasing rates. That's the thing that gets people in trouble. We're not likely to see something happen that's going to drive rates back down and recreate the lovely, wonderful, situation that we had here where rates dropped down and we were in the fives and all that. We're likely not going to be there. At best, we're not going to get much worse than where we're at now, and that's what we should look for. Looking at mortgage-backed securities, we're back within this range right here. Okay, so we're very much in here. Remember, what drove us out was right here. This was the GSE announcement. Pushed the mortgage bonds higher. Remember, higher is good. Broke us out of this range. We were above that range for the week, but they struggled being there anyway. Now we're back within that range, and I think that this is where we'll stay unless we break below that, which we don't want to see. So Ron Siegel said, why isn't anyone discussing the cash crunch in Japan? And more importantly, that Japan is the largest foreign holder of U.S. debt. They start selling U.S. treasuries. That affects our bond market and then our mortgage rates because it doesn't sell newspapers. That's why they're not talking about it. The market dropped yesterday, supposedly on Greenland worries. It wasn't just supposedly, dude. There was definitely reaction there, but no rebound today because everyone is thinking that they're still taking over Greenland. It's still a thing. It's definitely still a thing. But definitely reach out to me, Ron, and let's. I reached out to you yesterday. Reach out to me. I'd like to talk to you. So, but looking at this is going to be all the stuff. It's going to be about here. And what tends to happen with Trump's style, and again, this is relevant because we're using it to forecast where things are going to go, not because it's political commentary. I'm not a political commentator. This is not a political show. But that said, Trump's, his process is to come in with shock and awe and to come in swinging. Very, very violent negotiating tactic. And then he starts to ease back. And it's very possible that we go from the U.S. is going to take over Greenland to the U.S. is highly involved and gets more control, some mineral rights, and maybe, the ability to do more there. I don't think that we're actually going to end up with Greenland. I think we're going to end up with a lot of control over the region. And I think, and again, this is just my speculation, I think that's what Trump's play was about the whole time. And what will happen is, as that happens, things will settle back down. Again, they're not necessarily going to return back to where we were here after that GSE bond buying announcement. Because this was just like a kick. We need to see some more going on there. I don't know that the market would react twice to the same news if Trump reminded everybody that the GSEs are buying bonds. Traders, we may get a little bit of a boost, but we're really not going to see anything that pushes us back to those lows until we get some other kind of action. I don't think that we'll see a relief trade over the Greenland situation. Once it does settle down, and I think it'll play out the way I just said, I don't think that leads to rates improving. So keep that in mind. That's kind of where we're at on all this stuff, and that's it. So let's go ahead and talk about your favorite granola bar. My advice, cautiously float today. Again, I shared with you with our text alerts yesterday. Based on the way the afternoon was going yesterday, locking was a decent call. This morning, we have a nice wake up to a little bit of improvement in bonds, not enough to, drop everything and get excited. Start the day cautiously floating. We'll see where things kind of head up there. Be ready to lock if we see bonds start to sell off. And that's why the text alerts are so important, because we could see volatility. Again, I think that volatility potential reprice risk today remains moderate. There's a really good chance we could see some stuff happening there. So, Christy said she likes the crunchy peanut butter Cliff Bar. Let's see who else you guys said. So Christy likes the crunchy peanut butter bar. Let's see what else we got. Nature Valley peanut butter is Deb Dickinson's, which I said was my go-to. Vicky also big on that one. And let's see, looking to see if any of the other. Amber saying our texts are awesome. Thank you, Ms. Amber. Appreciate you. Ron says he thinks bonds are all about Japan. I think there was a lot of concern when everything blasted out over the weekend. I don't think markets are too concerned about it today. So I agree. But I do think that the initial reaction definitely had, because there's a lot of geopolitical and geoeconomic issues that would be on there. So Amanda, also peanut butter Nature Valley. Those are popular. So, all right, my friends. Well, again, thank you for joining me. That's what we got going on for rates today. The good news is settle your people down. The bad news is they're not going to get better. Not much better. So hopefully we don't get worse. That's why I said settle your people down. We're not likely to see them get worse. Bad news, we're not likely to see them get much better. Even if we do get an announcement that there's a peaceful resolution to the Greenland situation, I don't think that markets will rally on that. Stocks might rally, but which means bonds will get a little bit of a boost, but not a significant enough boost to see rates improve. It'll just be some pricing. And remember, when stocks do improve, we see bonds improve at the same time now. 20 years ago, you used to have that inverse relationship. Money had to flow from one to the other and one to the other. And nowadays, you do see, as they balance portfolios, if they're buying up stocks, they still have to balance and they buy up some bonds too. And we've seen some benefit from that. So keep that in mind. All right, my friends, I'm going to wrap it up. Y'all have a fantastic day. We'll see if tomorrow brings any new drama. We've got some GDP stuff coming out tomorrow, the PCE inflation data coming out tomorrow. All that will take a backseat to, all the headlines, but it's enough to at least talk about. PCE inflation data hasn't really moved bond markets and mortgage rates in months and months. So there's really nothing to get excited about there. Next week we get the Fed meeting. There's nothing on the horizon to show that things are going to get much better. So, all right, speech is done. Market is improving. Nasdaq big reversal. Ron posted on there. So hold on, before I hang up, let's see if mortgage bonds still only up 6 basis points. So really we're not seeing any real reaction in mortgage bonds. At least not anything immediate. So we'll see if that continues. So again, could see some improvement. Maybe we get up to even plus 15. But even if we do, we saw that movement on Friday where things were worse. Over the weekend, Tuesday, they dropped down. I mean, this puts us back up in a healthier spot for sure. But yesterday we ended at 99.72. Now we're at 99.79. I'm not worried, by the way, of the technicals of the 25-day moving average here acting as a resistance level. Not really worried about that, even in the least. Don't get too wrapped up on that. And yeah, Ron, you pointed out ADP more job losses yesterday, the weekly thing that they have. So, all right, I'll take that's it, my friends. Hope you all have a fantastic one. I'll see you tomorrow. We'll talk more. Bye.